Hi everyone, I'm Rohas Nagpal and I hope I'm audible and visible to all of you. So if one of you could just give me a yes, so I'll understand that you're able to see and hear me. Awesome, Roderick. Thanks so much for that. So I'll just give it a couple more minutes before we start off. Awesome. I can see a lot of you are already online. So anyway, don't worry, those of a lot of you may be from different time zones. So the recording of this is going to be available on all the social channels that you can watch this video on. And in case you have any difficulties, feel free to just post it as a comment below. Someone from my team will handle your difficulty. And whatever questions you have during the event, please feel free to keep posting them, and we'll definitely have our experts answer them for you. So, what we're going to talk about today is tokenization of real world assets on the blockchain. Now, there are a few very important key terms for us to remember when we talk about tokenization. The first being there has to be an asset. That's the single most important thing, obviously. So, there has to be a real world asset. Now, what do we mean by that term? So, usually in the blockchain world, anything which is not on the chain or something which is off chain is called real world, and anything on the blockchain is called on chain. So when we talk about real world assets, they could be anything from art to collectibles to carbon credits, aeroplanes, helicopters, rockets, any kind of real world asset. It could even be intangible assets, like, for example, the copyright license of a book that carries a lot of economic rights with it. In fact, the Harry Potter series of books is one of the top three most sold products in the history of human beings. So, even the intellectual property rights of a book or a movie or even software, that would be considered as a real world asset. Then we need to tokenize that asset. Now, what does that really mean in very simple language? When we talk about tokenizing something, it's that we are converting that particular asset into a blockchain token. But obviously, the asset does not lose its existence. Now, let's take an example of, say, something like a piece of art. Or let's say behind me is this wallpaper. So let's just presume it's actually a piece of art, right? Now, when I tokenize this on the chain, it is not like that piece of art is going to stop existing. It is still existing. However, it would now be with, let's say, a custodian, which could be a museum or a registered securities custodian. They would have the physical custody of that piece of art against which a blockchain token would be issued, and anyone like you and me, we could trade in that particular token, which represents ownership of that piece of art. But when we talk about, say, a conventional piece of art, there would be one owner, so one museum which holds it. Tokenization would enable millions of people to hold it. So, for example, let's say the Mona Lisa, the most famous painting in the world, probably. Now, if that's to be tokenized into a billion tokens and a billion people buy one token each for $1, so we're immediately giving it a valuation of $1 billion. And we, as owners of those tokens, do not get physical custody. The physical custody would remain with the museum. We would get economic rights that, okay, we own 1 billionth of the painting. And as the value of that painting goes up, the value of our token would increase. So now, obviously, this is very different from the cryptocurrency world. So, as you know, cryptocurrencies is the first blockchain use case. In fact, the first blockchain, which is the Bitcoin blockchain, was set up for the Bitcoin cryptocurrency. Now, in that kind of a use case, in a cryptocurrency kind of a use case, the asset is the cryptocurrency itself. As long as there are people in the world ready to give a certain value for that cryptocurrency, the cryptocurrency is a valuable asset. And that's on the chain. It does not have an off chain existence. So, a pure cryptocurrency exists only on the chain. When we talk about tokenization, there is an asset on the chain, which is a token, but that represents an off chain real world asset. And then, of course, we have something which kind of fits in the middle of the two, which is what we could call about NFTs, the conventional NFTs, the non-fungible tokens. So that concept really kicked off with things like, say, the CryptoKitties, where there are virtual cats that you could breed. And then we also saw something like the Bored Ape Yacht Club project, where we had these images which had an on-chain presence by way of that NFT, but the image was probably carrying some intellectual property rights also. So if I purchase an NFT, I may, depending upon the case, get the right to use that image maybe in my restaurant and put it on top of all the cups or put it as a wallpaper. So I also get some kind of intellectual property rights. So those kind of conventional NFTs kind of sit between the cryptocurrency world and the tokenized real world asset world. So they kind of come in the two of those. If you have any questions while I'm speaking, do feel free to keep putting them here. Ravindra is talking about someone who's tokenizing commercial ships. Sure, that's an interesting use case. I mean, ships are expensive, and obviously, it's not very easy for single companies to buy them. So, yes, definitely tokenization is a way forward. Of course, as we go around about it and we are going to talk more, you're going to realize that when we talk about tokenization, the legal issues are going to be very critical. Because after all, what if something goes wrong? Now, let's again go back to the world of cryptocurrencies. If you and I are going to do an exchange of, let's say, the BAT cryptocurrency, BAT, Basic Attention Token, one of my favorite projects. And let's say I'm going to give you BAT, and in return, you are going to give me USDT, the USD Tether stablecoin. Now, obviously, whenever we do a transaction, there's always a worry, what if I give the asset, but the other person doesn't pay? So, in the conventional world, when an import or export transaction happens, you have banks and letters of credit that come there to handle this counterparty guarantee. However, in the blockchain world, blockchains fundamentally support a concept called as atomic exchange transactions. Now, that's a very fundamental part of the technology. What it means is, in a very simple language, if the two of us, you and I, are going to exchange some asset on the chain, first, the asset gets locked in my account and locked in yours. The transfer happens and it gets unlocked automatically by the technology. So I don't have to worry about my asset going and the return not coming, and nor do you have to worry about it. So blockchain technology inherently gives us this capability, and that's why blockchain is the best way to tokenize a real world asset. Because I strongly believe that blockchain is built for one use case, and that is smart asset management. So whether it's a pure cryptocurrency or a token backed by an off-chain asset, blockchain allows us to do everything from issuing, reissuing, transferring, escrowing, and even burning the asset. So burning is basically when you send that asset to a burn address, which is the address on the blockchain with no known private key, which basically means any asset that goes there is lost forever. So these are the kind of unique features that blockchain builds in, and that's the reason we use blockchain for tokenization. Having said that, a lot of people say, can we not do fractionalization or dematerialization without blockchain? And yes, of course, we can. You can do this without, but blockchain brings a lot of inherent benefits, and that's the reason that's the most preferred way of doing tokenization. Let me just take some questions. So one question is, how are tokens connected to a DAO? That's an interesting question. So a DAO, or a decentralized autonomous organization, is uh, we could say it's kind of like a company, but instead of being rigidly structured as a company with a lot of legal formalities to be followed, it's an unregistered company or an unregistered group of entities who get together for a particular purpose. So, for example, the first DAO was created to have democratized investing on the Ethereum chain. And of course, that DAO met with a very bad ending because it was not coded properly. And somebody found a bug in the way in which the code or the smart contract was developed to siphon off millions of dollars. Now, when this happened, the Ethereum community was wondering, what do we do? Now, option one is we do nothing, because after all, blockchains are supposed to be immutable. So, if someone has successfully carried out a fraud or an attack, well, we just live with it. But a lot of people said, no, let us roll back the blockchain and let us reverse those transactions. And obviously, a lot of people felt that's wrong because blockchains are supposed to be immutable. Now, because the community did not agree on one way, the Ethereum blockchain hard forked and broke into two. One part which did not reverse the transaction, that was called and is still called ETC, or Ethereum Classic. And the second, the one that rolled back, is called ETH, or Ethereum Mainnet. That's the one that most of us already know and use. So that's the history of DAOs. And then we've had DAOs for all sorts of things. Like there was a DAO which was bidding on one of the first copies of the US Constitution. So a bunch of people got together, pooled in money, and bid for it, a physical auction. They did not win it, but the money wasn't returned because the members said, let's use it for buying other assets. So that's kind of what a DAO does. And now there are some jurisdictions, especially Utah and Wyoming in the US, where they're coming out with laws where a DAO can automatically be recognized and regulated as an LLC, or a limited liability company also. Now, where does a token come into the picture? The governance of a DAO is done using blockchain tokens. So an example would be Uniswap, and there are so many other DAOs. They have their own tokens, and the tokens form a way of governance. So people put in issues, and then you vote based on the number of tokens you have, and then based on majority, decisions are taken, and that's how the DAO kind of runs. Let me take some other questions. I've heard CBDCs will not be blockchain tokens. That's a very good question. So I'm happy here to share that last year I had an opportunity and the privilege of preparing a white paper for the Reserve Bank Innovation Hub in India about CBDCs. And as you know, India has already come out with a pilot run of CBDCs. I personally do not believe that CBDCs should be on the blockchain. I know a lot of people don't like it when I say that, but I believe blockchain makes sense when we need a single source of truth, and there are multiple sources, and that's the reason we need to put them on a chain. So there are multiple entities who are not connected to each other, who want a single source of truth. That's where the blockchain comes in. But when we talk about a CBDC, well, it's issued by one entity, that's the central bank of the country. So who else is going to be needing to provide any truth there? It's that single entity which is going to provide the tokens or the currency on it. Of course, in the future, when multiple countries want to get together and they want to enable CBDC of, let's say, India exchanging with, say, the CBDC of Singapore, at that stage, bridges could again solve the purpose. But I don't think blockchain technology would be right, because I don't think it'll be able to handle that scale. Blockchain technology is pretty good, it's pretty fast, but when we talk about things like CBDC, we could expect millions of transactions per second. For example, in India, we have the UPI, or the Unified Payment Interface. It handles millions of transactions. And blockchains are not there yet, and they're not even made for that level of transaction, which is the reason CBDCs need not be blockchains. I hope that answers your question. There's another interesting question here. How can filled liquidity? I'm not sure what you mean. You'd have to rephrase that question. Somebody mentions ETH and ETC. Yes, those are the two forked versions of Ethereum. Uh, Another interesting question, what are tokenization use case? So of course, once the panel discussions begin, a lot of use cases are going to be discussed, but just to tell you in brief, I mean, there are lots and lots of use cases, right from art, carbon credits, collectibles, like personally, the project that I'm working on, we are looking at tokenizing three kinds of things: carbon credits, luxury liquors like Scotch whiskey, and aviation assets. So there are all sorts of use cases that people are working on. So ideally, I would say the perfect asset for tokenization would be an asset where today liquidity is limited and per person investing cost is high. So it makes sense for us to democratize and break that down. And that would be the ideal way in which we would see whether something is a good use case or not. Of course, I'm just introducing the field, and we have a lot of experts coming in who are going to take a lot of these issues. So I'm just quickly introducing, but I am taking some of your questions. How can the legal side of tokenization be tracked? Are we restricted by the regulation of the jurisdiction depending on the asset? Excellent question. We have a session coming up very soon on the legal issues. So at that time, our speakers are going to talk about how blockchain tokenization needs a two-pronged legal approach, one for the asset and one for the chain. So they're going to go deeper into that. Let me take another question. Can you explain about Internet Computer Protocol blockchain? Well, that's not related to tokenization, so I won't be able to do that. But I do a lot of online sessions around blockchain, so feel free to ask me this question during that one. There's a question, how can liquidity token be provided? Okay, so I presume what you're talking about here is that how do we provide liquidity when we tokenize an asset? So again, that would depend upon how popular that particular token is and what is it that we are tokenizing. If it's a highly exotic asset, there may not be too many people interested in it and it may not get much liquidity, and that's always a big problem. However, if you go with something where a lot of people are interested in that asset class, like let's take an example about uranium U-235, right? So that's a very restricted mineral or metal. I'm not sure what's the right term for it. So obviously it's not going to have too much liquidity because it's way too regulated. But if you are trying to tokenize, let's say, a ship, well, there's a huge shipping industry and a lot of people interested in it, so that would automatically get a lot more liquidity because there would be a lot more people actually working in that. I've also authored the tokenization playbook, and let me just quickly share the URL with you. It's freely downloadable. If you've not already done that, please feel free to do it. I posted the link in the comment, and I'll be coming out with an updated version 2 of that also very soon. So please follow me on any of the social medias for that, and that'll be quite useful for you. Another thing I wanted to tell you is that this event is just the first in a series. And we're going to do a lot more events around tokenization because we believe that this is the single most important blockchain use case. And we are also going to be starting physical events. So, well, I'm going to be doing one in my city very soon. And I welcome all of you to organize such events in your cities. And we'll be here to support you in any way that's required. So, do get in touch with me if you'd like to do more tokenization related events also. There's a question about whether there will be a video recording of this event. Yes, so it's being broadcast across 5 social media channels, and the recording will remain there also. Another question. Uh, what are token standards? Sure. So that's a very interesting question. And since it's not one of the issues being covered by the panelists, let me go a little deeper into that. And don't worry, we are going to be starting our first session in a few minutes. Let me just quickly check the timing for that. It's going to start at 3:30. So I have a few more minutes to go. So token standards. So let's take the Ethereum blockchain. So on the Ethereum blockchain, the two most important and the most popular tokens are ERC20 and ERC721. 20 is a fungible token, 721 is non-fungible. Basic difference is that in the world of finance, if a particular asset is identical to all other units of that asset, we call it fungible. A classic example would be, say, the electronic money in your mobile app. So let's say you have $100 in your mobile app or $100 in your bank, right? And the bank shows it to you in your mobile app. Now, each of those dollars or rupees is identical to each other. There's no difference between them. So we call them fungible. But take an example of a house or an apartment. Each apartment is unique in itself, its location, its height, everything would be a little different, right? Even if they're identical size, owners are different, and because of that prices could change. Like if one is owned by a celebrity, it automatically becomes more valuable. So that's what we call as non-fungible. So usually when we create fungible assets on Ethereum, we use the ERC20 token standard. When we create non-fungible, we use ERC721. And now, of course, on Ethereum itself, there's a whole bunch of them available. And similarly, there are standards for other blockchains also. So, for example, on Bitcoin, now we are seeing the rise of ordinals and BRC20s. Similarly, Solana would have standards. Different blockchains have standards. I work for the hybrid finance blockchain. We have our own standards. So, every blockchain tells you its standards, and there could be multiple standards also. And those are important. You need to figure out which standard best suits the use case that you are building on. There's another interesting question about what is tokenization in payment. Yeah, that's a good point, but that's completely different. So that's not really the kind of tokenization we're talking about here. We are talking about real world assets having a blockchain twin, whereas tokenization is payment. is a completely different concept. So I wouldn't go into that this one. It's a totally different concept, and it doesn't even need the blockchain. Uh, there's an interesting question. Have you heard about ShipFinex? They're tokenizing ships. No, I've not heard about it, but it sounds pretty cool. So I definitely, after the event, go and have a look at it. Are you developing the tokenization solutions on a particular blockchain, or will there be cross-chain applications? That's a very good thing. So personally, I work for the hybrid finance blockchain, and we are the world's first regulated blockchain. So for us, we believe that unless you follow all the laws and you're regulated, you cannot do tokenization. It's just not going to work. So we use hybrid finance blockchain only. But there are lots of different people. So for example, there's someone in, I think, Argentina, if I'm not mistaken, who's tokenizing agricultural commodities. I think they're using Ethereum for it. So it's totally your call what asset you're tokenizing. And of course, there are bridges available which can connect across multiple chains. And I believe in the long run, we are going to have a maximum of 5 blockchains in the world from the 100 plus that we have today. And definitely there would be a lot of bridges connecting. Few more questions before we start off the panel discussion. Who stands behind the token standardization? So, like for example, on Ethereum, anybody, you can also go and propose a standard. So once you do that, then the team kind of votes on it. And if a lot of people find what you're saying makes sense, that could start being a popular standard which can be used. It's kind of similar to the way the internet runs on the RFCs, which is request for comments. That's how the internet is built. So even the SMTP and other protocols started off as RFCs. So similarly, that's how it works in various blockchains also. Just take a few more questions and then we'll start the first panel. What about tokenizing offline or physical goods, services like serial tag or QR code for artwork? How do you think this is going to, uh, when there are so many databases? Okay, it's a slightly complicated question. So you're going to have to reword that question for me. I didn't really understand it. Another question is, are there cross blockchain NFTs? Honestly, as of right now, I'm not aware of any. But if someone is, do put that in the comment below. Another question is, why can't projects that have both tokens and NFTs maintain balance and usually one of them or sometimes their pair collapses? Difficult question for me to answer. There's so many different NFT projects out there. What we've got to always see is there an inherent commercial value in that, and only then it's likely to stick. If the token has a different standard, then how do we know which is the best to go? Okay, that's a good question. So what happens is, the way we look at it is, ultimately you are going to interact with these tokens in a wallet. So as long as your wallet can support various standards, it doesn't matter to you which standard is actually being used. The choice of the standard would depend upon, uh, you know, the developers or the team behind it. For them, that would be pretty critical. There's an interesting question about, is there a HiFi Foundation? Yes, there is. So do get in touch with me if you'd like to know more about that. Okay. So now let me quickly start welcoming some of the speakers for the first session. So the first session that we're going to have is on Tokenization 101, understanding the basics and its potential impact. So this panel is going to introduce the concept of tokenization, explain the underlying technology, and discuss its potential to revolutionize various industries. So let me quickly bring in the speakers. Hi, how are you?
Hello, very well.
Would
How
you
are you
like
doing,
to?
Rojas?
Absolutely fine. Would you just like to give us a very brief intro, and then of course I'm going to give a detailed introduction.
Okay, sure. My name is Roderick McKinley. I'm an independent tokenomics advisor. And yeah, really happy to be talking about this really important trend in blockchain. And yeah, I feel like I'm really in agreement with a lot of the explanations you've been giving, really clear and appropriate on what is always a complex subject.
Awesome, awesome. Then, let me just stop. Yeah, Shinom, I can see you're here, but your video seems off. So yeah.
Hi,
Hi, how are you?
I'm good, thank you.
Shinom, would you also like to very briefly just say something, and then I'll introduce you in detail.
I'm a CEO at HiFi Blockchain, and I've been working in blockchain for last 7 years. And I'm a geek. I'm a techie by nature, but I love to do the sales and marketing also blockchain when it comes to. So nice to be part of the panel.
Awesome. So while we're waiting for the other panelists to join in, let me just quickly introduce. So, Roderick is a CFA with profound experience in token economics and blockchain advisory. From cryptocurrency to Web3 to quantitative modeling and strategy, Roderick's multifaceted skills have proven influential across the tech world. His experience spans token sales, cutting edge research, decentralized finance, and even the gaming and education sector. He's going to be answering two questions for us. One is he's going to share his insights on the future of tokenization and where he sees this technology in the next 5 to 10 years, and whether he thinks it's a good idea for asset owners to tokenize their assets. Let me see if okay. Let me quickly introduce Shinom. Shinom is a computer science engineer and has been working in the blockchain industry since 2016. She co-founded BankChain, a community of 37 banks, including State Bank of India, ICICI Bank, and Deutsche Bank. She's appeared as a cyber expert on the popular television program MTV Web, and she was also expert for DBS Bank, and she's been featured extensively in the Fortune magazine. And she'll be explaining the concept of fractional ownership and how it can benefit token holders. And she would be elaborating on the technological strengths of blockchain technology that enable the tokenization of real world assets. In this session, we also have two more speakers, Kamalika and Abdel Rahman. I'm just waiting for a minute or two for them to also join in. I think Kamalika is here with us. Let me quickly add her. Hi, Kamalika. I think there's slight lighting issue, so we're not able to see you very clearly.
Yeah,
There seems to be a bright light behind you.
yes, I was aligned in the wrong place.
Perfect, perfect. Now we can see you very clearly.
Hi.
Hi. Would you like to give us a quick 1 minute intro and then I'll give you a formal introduction?
I'm just very happy to be here because I've seen the guest list rehearse and there are some amazing people who are going to be turning up and giving so much of information. I'm going to try my level best to, add to that.
Awesome.
But yes, just to learn as much as all our listeners here.
Awesome. I'll give a brief introduction. So, Kamalika Podar has been recognized twice as a LinkedIn top voice and is known for her profound experience in the fintech industry. She holds an exceptional track record as a fintech product leader and has significantly contributed to the field through her incisive chronicles on fintech, cryptocurrency, and the emergent Web3 ecosystem. And she's going to be explaining in simple terms what tokenization of real world assets is and how it works within the blockchain context. And she's also going to talk about that because most people take loans for buying assets like real estate, what impact will tokenization of real estate have on the loan market? So I think we can get going and we'll go alphabetically. So I think Kamalika, you would be the first speaker. So the first question is, in the simplest terms, could you explain what tokenization of real world assets is and how it works within the blockchain context?
Oh, absolutely. So just a big caveat here. I don't like when we say tokenization, a lot of people keep assuming that, it is what's happened in the last couple of years thanks to blockchain. But really, tokenization is something that's been around for a few centuries now. Like if we go back to, the 15th century explorer like Vasco da Gama, he literally tokenized or rather gave out issued bonds of his for the whatever he was going to be making from all his explorations. So it started out as early as that. Tokenization became was necessary was because again taking the Vasco da Gama example, he didn't really come from a lot of wealth, but he did have great ideas and he knew how to build wealth. But unfortunately, in the business world, you need wealth in order to create more wealth. So instead of and this was typical for a lot of 15th century business houses where they would probably be doing really well in their particular area, their particular location. But when it came to scaling up their venture, they would often need to go back to either so at that point it was just the Pope's bank accounts that were there, or some of the very royal families that were there to borrow money from them. And borrowing money always came at a cost because in case your expansionary plans don't pay off, in that case, there's a possibility that you could end up even having to wind down the business that's doing well over here just to pay off those interests that you've taken to expand your business. So that's where kind of tokenization comes into play over here, because instead of saying that, you know what, I'm going to go to a bank and borrow money, you sell parts of your company. And by parts of your company, you're actually selling the future prospects of profits and revenues to the general public, or to people who can now afford it, because previously probably it was just out of budget for them. But with tokenizing parts of your company, you've given them that option to be a part of your grand adventure. So that's, I think, how tokenization came about. Now, why is it that, you know, only after blockchain technology did we start paying so much attention to tokenization? I think that is something that's a very interesting uh, topic to discuss, and that's simply because previously all the tokenizations that happened would have to go through a middleman, and we all know that, you know, middlemen end up taking a huge chunk of the profits on both sides, not just one side but both sides. uh, but with blockchain, you do it's literally a platform to disintermediate, right? So you do away with that middleman right over there. So the profits on either side expands. The affordability of what you wanted to buy also goes up. And thanks to that, people are able to buy more. So your value also goes up, the profits you're making also goes up, and the amount you want to invest also goes up. That is, of course, number one advantage. Number two advantage, I think all of us do know that blockchain can work because it's distributed across the globe. The computing power, it can work round the clock. You're not beholden to one particular time zone alone. That's the second advantage. And the third biggest advantage is trust. I mean, I think blockchain was designed to bring about trust in a trustless environment. So I'm just going to pause there. And yes, back to you, Rohas.
I think it was a very nice example of bringing Vasco da Gama into it, and that makes a lot of sense. In fact, if you look at the first companies that were ever created in the world, in a way, that was tokenization. It's just that, okay, it was called a company, but yeah, fundamentally, that's what it is. And yeah, that's a very nice way. Let me move on to your second question. Now, so most people today take loans for buying assets like real estate. What impact do you think tokenization of real estate would have on the loan market? Especially in the Indian context, we've begun to see a lot of apps coming out for real estate tokenization. So much so that SEBI, the Securities and Exchange Board of India, which is the regulator for the securities market in India, has come out with a discussion white paper a few weeks ago, and they're planning to regulate these kind of apps. So what do you feel is going to be the impact of buying tokenized real estate on the home loan industry? Kamalika, were you able to hear that question?
This is a very interesting question. I did, but I think I'm having a poor network here, and sorry for that. This place does have a little bit of an issue with internet. I hope I'm audible.
Yes, you are.
All right, okay. So when it comes to real estate, the growth in real estate yield is literally limited in pockets. Like it's very compartmentalized. And what do I mean by growth in real estate yields? So every real estate generates some sort of returns, right? And that is what we call the rental yield. So if you've paid, say, 1 crore rupees to buy a particular property, and on a monthly basis, say you're getting 10,000 rupees from that as a rental income from that property. Now, on an annual basis, that would be around 1.2 lakhs. So that 1.2 lakhs divided upon 1 crore would be your real estate yield rate over here. Now, the problem is this 12% yield rate, sorry, 1.2% yield rate is it's actually quite on the higher side. Most of India, even right now, they sit at anywhere between 0.8 to 1.3% real estate yield returns.
But that would be for residential or commercial also?
Oh, yes. I'm just considering residential at the moment,
okay.
Rohas.
Got it.
Because I think when it comes to taking loans, most Indians do go in for a home loan rather than buying a commercial real estate. So just focusing on that. But yes, so what I was saying is this is how typical real estate yields are calculated. The issue there is that you are not taking in the interest cost over there. So if you add compounded interest over there, which even if we take it at the low rates that it was in 2020, about a 6%, you'd still end up paying, and assuming that typical home loan which lasts for 20 years, you'd still end up paying something close to 1.8 to 2.2 crore rupees. So technically your yields are going down a lot more when you take that into effect, right? Because that is the cost that you have spent in acquiring this particular real estate. So that is the biggest challenge right now. And that's also a reason why you'll see a lot of youngsters these days saying that, oh no, we're okay without buying a home because you're really that the returns do not make any sense. But the minute you start having initiatives to tokenize it, we've seen this before, it just makes it so much more accessible for people to join in that and the minute you make it accessible, the demand for it goes up, and price is again a function of demand and supply. So in a way, your price appreciation will also happen, but because you've tokenized your entire 1 crore of building, let's say suppose you're issuing tokens that are as low as 1,000 or 10,000 rupees per token. In that case, every month I can keep buying and incrementing it, and every month I will also be getting that 1.2% yield on my real estate as well. And 10,000 rupees, I think a lot of people can afford it. So like I was saying, right, so your appreciation of your asset or your token values is also there because the demand goes up, supply is limited. So yeah, it's I think it's a win-win on both sides, where you keep increasing the stakes that you have in that particular tokenized particular tokenized asset, and up to a point where without having to spend on interest, you've ended up making sure that you own that asset. I think the other side of this is also there, where people are paying interest, losing out on that interest cost when they are buying real estate for themselves. The other aspect is that a lot of wealth that is generationally passed down happens to be via real estate in our country. Gold and real estate are like the two things in which generations pass down wealth. Now, God forbid, a situation or a scenario happens where you'd have need for liquidity. You need that money, but you need it for a short period of time. It's extremely difficult to move real estate or move even gold for that matter if you have like chunks of gold. And there's always, and if it is unfortunate, in such unfortunate situations, there is a chance that it is going to be a distress sale, which means you're not even able to realize the true value of the asset that you're holding. Now, in this situation, and what's the other alternative that we have here? We go to banks again, where we're ending up, if we're taking a personal loan out in this case, we're going to have to pay an interest rate. If you have a very good credit score, you pay an interest rate from anywhere between 10.5 to up to, I read, about 20% from some of these NBFC borrowers. So it's a crazy amount of money that you're paying for that short-term liquidity. However, let's say that our assets were tokenized. And now I need, for example, on an urgent basis, I need 50,000 rupees today, and I will pay it back by the time my salary comes in, or by the time my next 2 installments of salary comes in. I need it just for that very short duration. Now, instead of going and begging, borrowing, stealing from others, I can simply issue a few tokens of my real estate, of my whatever the assets in real world that I have, assuming that we have the custodians and the appraisers and all of them in place who've done the back end work to make sure our assets are tokenized on a blockchain. I can issue parts of my real estate or my gold as tokens to people and raise money from them. Now, I will be, because I am issuing tokens, I will also have to agree to pay them a monthly yield over there. But the minute I get back that money, and again, if it's real estate, it's going to be a lower yield. It's not going to be the tokenization of real world assets, fortunately for us, follows the yields that we do see in the real world as well. So it's going to be more or less in those range, which means you're getting interest on your property for something as low as 1.2% to 2%. I think that is an amazing deal over there. So that is again another really great advantage of tokenizing real world assets.
Awesome. Thank you so much. There is a question for you on this, but we'll take it after the other speakers have taken their basic question. So, Roderick, these are the two questions for you. So, if you could share your insights on the future of tokenization, where do you see this technology heading in the next 5 to 10 years?
Sure. Just quickly, I'd like to thank you for your introduction and also let people to know that they're very welcome to connect with me on LinkedIn and on my YouTube channel, Token Design, where I also help share knowledge about this sector. So to your question, where do I see this technology in the next 5 to 10 years? Well, first of all, I think that 5 to 10 years is the right sort of time frame to be talking about here to start seeing broader-based traction. I'd be leaning towards 10 years, given the pace at which regulations are moving. Now, within this time, we're going to see a number of critical economic components that have been missing fall into place. And these include digital identity, flexible, controllable privacy, legal tokenized money, money that's normal fiat money, but that lives on the blockchain and is legally recognized. And also going back to one of the earlier questions, greater standardization of smart contracts, and also I think data reporting that is structured into the blockchain itself. Now, these technical features are then going to be sufficient, capable, to allow us to migrate lots of existing business activities onto the chain, which is what we're talking about here. So we're not quite there yet. We need a few more key pieces to mature. And when we get there, we end up with this new broad class of applications, which are really just concerned with resource management and business execution. That ties back to what you were saying earlier, Rojas, about this technology really being all about resource management. Now, many of these applications are not going to layer any new special risk features onto those assets, but just be super efficient at transferring ownership and executing commercial terms in a fast, low-cost, reliable, scalable way between unrelated parties, okay? And on the company side, this is going to translate into massive savings. EY have been developing some of these products and trialed some of them with Microsoft and realized efficiency savings of 90%. I'm going to stress that 90%. That gives ample room for some of those savings to be passed down to customers as well. Now, inside the company, things will be noticeably different. There can be fewer people, processes, departments to go between. And that's going to be very noticeable. But anything that connects with the customers on the end user side may not be that different, apart from the prices that they get. They may not be aware that they're using something that has a blockchain backend, and they won't need to care. And that's the same as them not needing to care about what language their favorite apps are being written in. So that's the trajectory I see unfolding over the next 5 to 10 years.
Awesome. Thank you so much. The next question for you is, do you think it's a good idea for asset owners to tokenize their assets? Could you elaborate on some of the benefits for the token issuers?
Okay, so now that longer term vision towards resource management that I was just focusing on is really only just beginning to emerge. And I mentioned that we're still missing some of the key pieces there. You might want to experiment with those kind of applications if you're a larger organization and you have time and budget for that kind of operational R&D. But for most people today, the use cases which are more developed out of the box relate to asset financing, which was the focus we just had when we were discussing real estate. Now, tokenization in this context is really just amounts to blockchain-enabled securitization. And this allows investment rights to be fractionalized at a much lower cost per tokenized share than our existing methods allow for. And that removes the sort of floor that people that is in place at the moment that stops people with lower budgets, lower investable sums to participate. And once that floor is removed, projects get access to a larger pool of investors who have these smaller amounts of investable capital. And at the same time, blockchain, especially DeFi architectures and mechanisms, will make liquidity available at low cost. So that provides the investors with more flexibility over when they sell their tokens, something which we were just discussing just now. And that allows for the inclusion of investors that have shorter time horizons or more precarious financial situations, again, as we were just talking about. And that, again, broadens the amount of available capital that's ready to flow into these projects. Now, what does that do? Well, if there's more capital available, that lowers the cost of the capital. So that can go two ways. That can increase returns for the asset owners, but it also generates the opportunity for savings to be passed on to end users, because you can generate the same yield at lower cost. So this whole thing is going to open up new asset classes to ordinary investors, and also give them greater options for portfolio management, which eventually we'll also see automated through DeFi as well. So you can have like a robot portfolio manager that will reallocate between real estate, ships, or whatever's cooking. And all of this is going to create greater levels of financial inclusion and really streamline the investment process and make it a lot cheaper and efficient in the process. So everyone, every side of this transaction benefits. So that's, I think, right now the low-hanging fruit that's ready to be plucked sits on these financial applications that we've just been discussing.
Awesome. Thank you so much for sharing your perspective on that. Shinom, I have a couple of questions for you. Could you explain the concept of fractional ownership and how it benefits token holders?
See, if you look at a time, all the companies, when people go and buy, I'm really sorry. So all the companies, when people go and buy shares, so basically they're owning the company in fractions. As of right now, maybe I have a business idea and I don't have the strength to run a company or a business empire, but I want to be part of something that is so big. So at that time, what you go is you go buy some shares in the company, public limited company especially. So that's how we have some part of the company. And at the end of the financial year, profits are shared with me because I'm part of the company. Similarly, this kind of concept has come into asset classes, other asset classes, apart from it being companies. I think nowadays a lot of people are living with an attitude of YOLO, we only live once. We want to do multiple, in terms of investment, but we don't want our money to be blocked, a large chunk of money to be blocked in one asset class. So that is the reason I want to be able to I have a dream of buying an airplane. I want to be able to, afford to have some barrel named after me in Scotland, maybe. So at that time, maybe the amount of money that is required to make that investment right now is huge for me, and I don't want to block that part. So in that case, what I'll do is that chunk can be divided into maybe 100 parts or 10 parts. Depending on the amount of investment that I will make, I will be able to own one part or two parts of that particular asset. Now, how the asset is going to benefit me in a long term is, so for example, in case of aviation or a plane, as and when plane is making money, it's a private jet, people are booking it, rentals are coming in after deducting maintenance. Since I'm a part owner of it, because I own a fraction in that plane, I will get profits as a part of, I'll be shared by profits at the end of the year. Similarly, if I go in other asset class, let's say I said about alcohol, and let's say we're talking about real estate, at the end of the year, I have that part which is a limited resource. Let's say, after, and specifically in case of alcohol, more it ages, the more value it gets. So maybe after 10 years down the line, that investment is going to give me returns, even if it was a one part or a 10 part. So it's very easy for most of the people who want to do multiple things at the time and giving with small investments amounts. So I will be able to own a small part of it. And blockchain is particularly, right now we are all talking about blockchain and non-blockchain things also, but everybody talks of blockchain as it's an alien technology. I think it's a mixture of existing technologies which is there, and it just helps us push this use case forward, because if multiple parties are involved in it, it's very easy for all the token holders or all the owners of my fraction. I can interact with them. We can regularly collaborate about where to invest next and which part is somebody want to sell it. So I think it's the future game that we are in for.
Awesome. Can I ask you the second question?
Yeah, I think I already answered a part of it in the first.
Right. So, well, it's basically on the technological strengths of blockchain technology that enable the tokenization of real world assets. If you'd like to add something to that.
Yeah, so I think I'll give two perspectives, because when it comes to tokenization, there are two parties involved. One is somebody who's putting their asset on the blockchain for probably generating more revenue or more liquidity, and the other party comes in, people who are investing in that. So from both the perspective, the trust factor has to be there. We are talking about a global audience. We are not talking about, probably I'm doing it with my friends or relatives or people know. Earlier, that how we used to deal in this scenario is that I would trust my friend or I would trust a family member who's probably investing, and we both will have small chunk of amount money and then we'll invest in real estate. But now we are looking at a global audience. I don't want to be investing in the maybe near vicinity or maybe in my city. I want to be able to invest in other countries also. I'm sure that we do have still the hurdles that every country has different laws, but I'm sure we'll figure it out because it's not a long way. It's a very short term game, and very soon every government is also realizing that part. So trust factor comes because that is an inherent feature with blockchain. The technology works in such a way that every person who's associated with it will have transparent. So blockchain, it being a pseudo anonymous, I know everybody. This address is doing this part. Yes, the problem comes is who this address belongs to. But we are also in the process of regulated blockchains, HiFi being one of them. That part is transparency and then liquidity on the flow. I can just put an asset in the air and everybody be able to buy it without knowing who this person is. That trust factor comes in. Secondly, because blockchain is not centralized, it's not run by one particular organization, who will just run away. It is decentralized. We're talking about decentralization. I'm not talking about the centralized part of it. There, I can automatically tell this person is not going to cheat. Secondly, I think the transparency and it is immutable. Immutability comes in that I cannot override anything. If I made a mistake while maybe creating an asset, oops, it happens. But I next time will be able to add a part to it, but I cannot remove it. In databases, what used to happen is, because we can do tokenization without blockchain being involved, but at that time we'll have to use for a database which has create, read, alt, delete kind of commands where it is very easy for me to make changes in it. But when it comes to blockchain, I cannot make those changes in it. So that is one of the advantages that I will trust the person more and I can go global. So I think these are the inherent features of the technology part which will help us achieving the role of tokenization in the real world.
Awesome. Thank you so much. Kamalika, there's a question for you.
Yeah, sure.
Do you see rental yields getting better with tokenization?
That's a very interesting question. Okay, so before I answer that, let's understand that blockchain or tokenization of assets is not creating a new asset. It is simply creating an avenue for that asset to be monetized easier. So for you to either sell it, it's just making a erstwhile illiquid asset slightly more liquid and slightly more affordable, at least in parts. So will that affect the underlying asset quality, which is what rental yields are? Not really. So what I think will happen is, and we touched upon, Rodriguez touched upon, commercial real estate to like very, very briefly over there. So that is one thing that is a very high yielding, much higher yields than rental assets. But to buy commercial real estate, you need to have a lot of capital. Think, hundreds and thousands of crores of rupees. So that was never accessible to the common man. But where is that particular, and with fractionalizing of it, you can get a piece of it. You won't get like an entire, IT park or something like that, but you could get like a small cubicle in one of those major IT parks. But does that mean that IT parks yield or commercial yield is going to go up? That really, really depends on where that commercial park or that IT park is really situated. If it is situated in, say, Nariman Point, there's only so much of land in Nariman Point that's available, and everyone wants to be there. So that asset is going to appreciate at a much higher. The commercial yields over there is going to appreciate at a much higher rate, versus, say, a real estate property or a commercial property that is based in Panvel. It's not yet developed so much. So in the next 5 to 10 years, basis the demand in that area, it may go up, but it's not going to go up simply because we've used blockchain to tokenize that asset. So on the commercial rental part, I hope that made sense. But what will happen is that because we're removing a lot of middlemen in this process, right? I also think what can happen is that we will have a good layer. So on top of the tokenization, we'll have a good layer of smart contracts coming in, which will ensure that there is a steady, or at least, if not a steady flow of rental income, there is a predictable flow of rental income coming in. So that way, the asset price or the token prices will also be baked in to handle that future income that you will be getting from there. I went around the bush, but I wonder if I made sense to you.
Absolutely, that was pretty clear. And I also realized that you don't like Panvel too much, but that's okay. Okay. So, would any of you like to add anything else? I do not see. Let me see if there are any other questions. Uh, no. So, would you like to? Would any of you like to add anything else?
I mean, just rejoining on that last question. Yeah, I think there are going to be other factors that really decide what's going on with the yield. But yeah, it's exactly as you said. If once the smart contracts come in and take out all these middlemen, it is going to be less expensive than it otherwise would have been. And then it comes down to sort of like market forces to decide whether that is captured by the investors or whether some of that is shared and passed down as lower rental rent to users and occupants.
Awesome. So thank you so much for your time and being part of this session. And I look forward to having more sessions with the three of you. Take care. Bye-bye.
It's been a pleasure.
Absolutely.
Thank you, everybody.
Thank you. Bye-bye.
Bye-bye. So for the viewers, we are going to move on to our next panel discussion in a few minutes. I can see. Just give me a second. Hi.
Hello.
Hi. So just we'll wait for the. So I'm just waiting for Jeanette to come online.
Sure.
Few seconds, she should be here. In the meanwhile, let me just start with quick introductions. So I'd like to welcome Nida Khan. She's the CEO of Nash Fintech X, a Luxembourgish startup. I hope I pronounced that correctly, providing software solutions, specializing in blockchain. She's software for the climate sector, a pioneer in that domain. Her software Decarbo NX is a blockchain-based carbon market that fractionalizes carbon credit NFTs. She was ranked second globally for UN SDG 13 in the climate category for her solution, DecarbonX in Norway, in an event backed by the World Economic Forum. She is one of the 36 global innovators selected in the Expo Live Innovation Program in Dubai for DecarbonX, and she'll be showcasing it in COP28. She holds a doctorate in computer science, where her industrial research on blockchain-based financial applications was accorded the Luxembourg National Research Fund grant for innovative industrial practices. And she's received VC training from Middle Game Ventures, where she emerged as one of the winners in the training program. Welcome so much here.
Thank you so much, Rohas. It's
Awesome.
a pleasure to be here.
Awesome. Let me just quickly bring in this. Give me a second. I'd like to introduce Shan Zaveri. He's an entrepreneur with an interest in product design, architecture, real estate development, asset management, and blockchain technology. He started a product design firm at the age of 16, owned and operated a nightclub at the age of 18. That's amazing. And has been a real estate developer for over 25 years. He founded Amaya Properties with a group of friends and completed 1.5 million square feet of development over the years. Shan has co-founded Collated Ventures, which has 2 million square feet under development, and amassed an equity-backed land bank, which will be developed in phases. He's also founded Terrazzo Network, which is building a platform for private market investments through asset-backed securities on the blockchain. Terrazzo's platform will list tokenized securities representing high-quality real estate assets, venture capital, and other curated private market investments. Welcome, Shan.
Thank you.
I'll briefly introduce Sanya. Oh, 1 second. Okay, let me just quickly introduce Sanya. Yeah. So Sanya Nagpal is the author of the playbook on tokenization of aviation assets. At the age of 15, she was recognized as one of the dynamic women changing the face of Indian cyberspace. She's passionate about blockchain technology, asset tokenization, and is an aviation enthusiast. She has lectured on cryptocurrency investigation and blockchain basics at several forums, including Kerala Blockchain Academy, St. Stephen's College Startup Incubation Center, Future Crime Research Foundation, the UP Police, and Microsoft. Welcome, Sanya.
Hi, so glad to be here.
Awesome. And finally, let me introduce Jeanette. Jeanette Spalding. So Jeanette is a seasoned innovation executive with a robust track record in financial technology, having held key roles at BNY Mellon and Bank of America. Her extensive experience also includes serving as CEO of the asset management division at Invenium, a company that provides data solutions for tokenized assets. Earlier in her career, she was an investment strategist at BlackRock on a team managing $400 billion of assets under management. Jeanette has also been involved in the blockchain industry since 2017, assisting numerous startups in the blockchain and tokenization space. She currently leads Tokenized, which is an asset tokenization consultancy. Welcome, Jeanette.
Thank you. It's great to be here.
Awesome. So let's begin in alphabetical order, and I have the question for Jeanette. Could you explain how the tokenization of real-world assets could democratize access to investment opportunities?
Absolutely. So I'll mention a couple of things. The main piece of the democratization of real estate investment through tokenization is the fact that tokenization allows for the compliant fractionalization of real estate assets, because once you're able to take something that is a security, at least in the US. So I work with a lot of US companies. I'm based in the US. So looking at it from a US compliance perspective, taking something that is considered a security and basically allowing it to be wrapped, taking the legal wrapper and putting that on chain means that all of a sudden now it's easier to allow for smaller pieces of that real estate to be purchased by people not only in the States, but around the world. And again, there are different sorts of regulatory filings that need to be done if you're going to do a securities offering abroad, but it's completely possible. And the technology here just makes it a more straightforward experience than if you had an investor that was abroad and you needed to provide them an interest in an LLC, for example, but you didn't have the benefit of blockchain rails. So that would look very different if you were trying to do that transaction on paper, and it would be much more difficult to manage and much more expensive. So that's the idea here, where you're bringing down costs on investor management and legal fees associated with giving more people access to an investment that would be considered a security. So that's one of the pieces of this. And then the other piece is indeed the global access piece, where once you have a security token that you have launched via a compliant security token offering, you're able to then go and put that on a primary marketplace that is online. And you can get investors from all over the world. So instead of relying on your investor community, which is how a lot of these private placements are currently done, where, if you're an investor and you're not in the know and you don't know what next new real estate deals are happening, you're kind of left out of that kind of transaction. But in this way, you're able to actually see and get access to different real estate transactions that are placed on these primary issuance marketplaces, as well as the secondary trading marketplaces. And once again, I'm kind of discussing this from the US perspective, but once these sorts of marketplaces have something that we call they're an ATS, they have an ATS license, that allows for tokens to be traded compliantly as securities on these different marketplaces, and done so in a global fashion.
That's awesome. I have a second question for you. Where do you see the future of the tokenization of real world assets? What kind of assets do you foresee being tokenized that are not tokenized as of right now?
So I see more and more sub-asset classes, and specifically, within real estate, but across many different asset classes and within private markets. So, and within real estate specifically, people will be able to manage very granular components of a portfolio. So at the moment, where we have situations where when investments are not tokenized, there's usually a pretty high minimum investment, which means that someone might spend $10,000, $100,000 on a single investment in real estate. However, with tokenization, that amount comes down more to like $100 or $1,000. And so that means that they can buy more with their money, which means that they're going to be able to build portfolios that are diversified. And for me, that is where I see the tokenization of real assets, and particularly real estate, going, is allowing a greater number of investors to have diversified portfolios. And like it was mentioned in my bio, I come from traditional finance, from the investment management industry. Therefore, keeping in mind the importance of diversified portfolios, and anyone who is looking into investing knows the importance of having a diversified portfolio across different geographies, across different asset classes. So this just makes it so much more possible for the everyday investor to have this diversified portfolio. And once we see innovations coming from the AI world, which, obviously with ChatGPT and things like that, we're seeing AI take the world by storm. That's going to start coming into the blockchain sector as well, where you're going to actually be able to construct diversified portfolios according to your risk preferences, according to your geographical preferences. And every time an asset comes online that suits your investment profile, that you'll be made aware of that via AI, and you'll have the opportunity to contribute that to your diversified portfolio. So I see the future of tokenization really being a continued growth of democratization as well as diversification, and giving people the tools to become better investors via increased use of different technologies.
Awesome. Thank you so much for that. Let me move on to Nida Khan. So Nida, the first question for you. So the first question is, how can real-world asset tokenization impact traditional financial institutions and markets, and what changes might they need to make in response?
This is a very good question, Rojas. It's not an easy question, I would say, because traditional financial markets, they form the core of any economy. And so our economies thrive because of these financial markets. So any changes you are trying to introduce into these markets, you have to be very conscious of what you are doing, and a multifaceted approach has to be taken in this respect. So when we see the traditional financial markets, we see that they are very reserved to any kind of change. And so we try to talk about the benefits, basically, when we talk about tokenization with respect to these markets. And when you are using like blockchain, what you see is increased efficiency in the processes that are involved in tokenization. There's reduction in clearing and settlement time, for example. Then you also reduce the counterparty risk a lot. You increase the liquidity of the assets. And because of the automation in general, you see that the speed is increased of the entire process. People have access to like the ownership of the asset more readily. And there's a significant cost reduction. Like during my PhD, I'm a computer scientist, and I researched on the use of blockchain in industrial use cases, especially finance. And I did tokenization. So I coded a smart contract on Ethereum, and we use the public blockchain, we use the private consortium blockchain. We did a cost-benefit analysis as well. And what I realized after that was that there's a massive cost reduction. So for example, apart from the other costs that would come into play, but the basic, coding of the smart contract, the transaction fee, and enabling the same number of transactions for, let's say, a bond that had been sold in the market previously. We came to the conclusion that, let's say, in the public, the cost is like 1.9 times more when you use the conventional way. and it is reduced in public Ethereum. And when you go to the private part, like private consortium blockchain, what happens is that the cost is like, if you go do the conventional way, it would be 2 times the way it is done in the private consortium blockchain. And what will happen with this cost reduction is that you will open this market to a larger number of people. There will be more investors. So people perhaps who are in the middle income group, they will be more ready to come and start investing. Then you open it to small and medium enterprises, these SMEs who perhaps did not have access to capital requirements and did not have the infrastructure or the money to go about doing it the way conventional issuance takes place. They can, readily adopt tokenization and fulfill their capital needs. So apart from inclusiveness, what blockchain brings into the picture is authentic data, because all the data, as some of the other speakers mentioned, the data is immutable. So the blockchain recording happens in a way that the data that you record is permanent. It brings about transparency. So basically what it does is that it reduces barriers to entry in the market. So when we focus on these benefits, I think this is something that would be dependent on the business, particular business use case you are using tokenization for. And this can be very appealing to traditional financial markets. If that answers your question, Rohas.
Absolutely, it does. Let me ask you the second question. What challenges are associated with the process of tokenizing assets, and how are they being addressed?
Basically, there are a lot of challenges when we talk about the challenges. When we talk about the potential benefits, in order to reap on the benefits, you have to do a lot of changes in the financial markets. These changes would be like you have to maintain a kind of a unified digital identity. And this digital identity management has to be such that, the anonymity that, or the pseudo anonymity that comes with using blockchain goes away. Why? Because what pseudo anonymity or anonymity facilitates is, it allows the participants to indulge in wash trading, for example, or market manipulation techniques, which can falsely raise the price of an asset and which will not benefit the market in the long run. So what you have to do is you have to have a digital identity kind of a management interface. At the same time, it has to be a unified approach. So if you're dealing with other jurisdictions, they also have access to that identity and the mechanisms being used. Then you have to use digital KYC, which is very, very crucial when you are dealing with any kind of processes in the financial market. And at the same time, you have to monitor the transactions to ensure that there is adherence to anti-money laundering or CFT, for example. And you need to employ, let's say, more technical resources who can gauge the feasibility of the process you are using. The smart contracts that have been coded, smart contract auditors, for example, would be required for this. And at the same time, when you're bringing assets on the blockchain network, there is no way to determine for the investors whether the assets are really in place of the chain. So we talk about decentralization, but in case of tokenization, we would require, as of now, a custodian or a third party which verifies and validates the assets, for example, which are backing those tokens that have been issued. And this custodian, if it turns out to be a bad actor, it will be very detrimental to the entire process. So these are, I would say, some of the challenges. Then financial education as well as technical education is paramount, because you need to gain the trust of the investors. This is a new initiative. And as always, as I mentioned, financial market professionals are very reserved to anything new. This is the infrastructure on which the entire economy is based on. So you have to convince them of the effectiveness, the economic benefits, as well as bring in the trust factor in order to encourage them, to use the process of tokenization.
Awesome. Thank you so much for that. Sanya, we have a question for you. How can tokenization benefit the aviation industry?
So right now, I think the main benefit that would be reaped by the aviation industry is liquidity. Now, as a rule, most aviation assets are highly illiquid. Now, this means three things. Firstly, they're extremely capital intensive, which means buying an asset is extremely expensive. So sometimes it's infeasible for new businesses or small businesses to be able to afford to buy these assets. Number two, the time between each stage of sale is extremely large. So, for example, from the time of manufacturing to the time of sale to a leasing company. And then from that to sale to the airline finally, there's a huge waiting period. And the last, it's very difficult to facilitate sale and purchase of these assets. Now, all of these problems are currently being solved by tokenization, right? Because tokenization speeds up the process and it also democratizes it. So it gets sold off easier and faster than when you try to approach a single buyer or a single entity. Now, the next one is global market access. Now, I think if y'all remember what was talked about in the previous session, people from all around the world can access these markets, right? Before it was mainly limited, let me say, to firstly people who had extremely large amounts of capital to invest. And number two, people in select industries. Now, a person like me who's sitting at home doing a different business would not usually have access to the aviation industry. Now, using blockchain, which is by itself something that runs 24 hours a day and is easily accessible from all around the world, we basically imbibe those characteristics of blockchain into the aviation industry. Next is improved transparency. Now, I think when it comes to investing, a very good philosophy to keep is what you can trust is what you can see. Now, a basic characteristic of blockchain is transparency. So everyone can see which addresses are doing transactions, and you can see who are the owners, where are they based. I think those basic characteristics will really benefit the aviation industry.
Awesome. Thank you so much. The second question for you is, what are the challenges in the tokenization of aviation assets?
So I think with this answer, I'm basically just going to build upon what Nida touched upon. So the first one is regulatory compliance, right? So firstly, the aviation industry extremely heavy on regulations, right? Every country has a different set, and there are a bunch of authorities which you have to register with. You have to make sure that you're complying with all of those rules. This can firstly turn out to be a very long process, right? It's going to take maybe a few months to properly get all of these like authorizations in place. Number two, it can sometimes be an expensive process because you will have to pay the fees for each and every single one of these registrations. Number two is asset valuation. Now, the only way to make sure that proper and appropriate price discovery is happening, you have to make sure that your asset is valued from time to time. Now, if you're doing this every, say, 3 months or 6 months, it can come out to be quite a time consuming as well as capital intensive process. And the next one, which I think Nita mentioned, is investor education. Right now, we're very, or at least the current market, is very satisfied with traditional forms of investment. So that's shares, that's bonds. They're kind of uncomfortable with the idea of such a new form of investment. Now, a slightly riskier investment opportunity that people are opening up to is crypto, right? This is kind of a step on top of that. So it's going to take some time and intensive education and campaigns to actually get people fully comfortable with the idea.
Awesome, Sonia. Thank you so much. Shan, I have the first question for you.
Yeah. Yeah. So, yeah.
Can you share your experience with the tokenization of real estate?
Yeah. So our business model traditionally here has been to raise equity for real estate projects. Typically, each project is in an SPV, and we've raised capital from sort of private investors. Typically, in these structures, you work within a small network of people with whom you have comfort, and then typically you would raise the largest ticket from each investor so that you have to deal with less people. And again, typically each project has a lifespan which may range from say 4 to 7 years. So this is the traditional real estate funding model, which is equity backed. You can have a debt backed model, but the equity model works like this. Now that's how we've been doing real estate for many years, and we were looking for an alternative in terms of how to democratize access, make this more inclusive, give people flexibility, work beyond our network. So we went about trying to figure out how we could do this. It was a fairly long journey to first figure out what to do, and then how to create a legal structure around this, and then how to approach the regulators. When we started this process, it was very exploratory, but one thing was very clear, that we wanted to do something which was regulatory compliant, which used technology and innovation rather than large infrastructure to reach our goal. And we after 2 years, we are probably now, Terrazzo is the first company in India to have permission to tokenize a real estate asset under the regulatory sandbox of IFSCA Gift City. We are constructing a building which we will tokenize. Some part of that equity is domestic investors who have the non-tokenized stake. And then we have a small portion of the equity which is being tokenized as a proof of concept. And I must say that, while there have been a lot of challenges, the IFSCA and their approach has been exceptional. They're an exceptional regulator, without compromising investor safety. They're really fostering innovation. So, and I think, so the regulators have been very cooperative. We are also working with great legal experts in the country and beyond to figure out how to do this in a manner which is manageable for us and easy and safe for investors. So we will be launching our first tokens, in the next month or two. We have just started our process of fundraising for this asset. So I think that's been our process. I think time will tell how this goes. Our plans is to create a platform for really curated tokenized securities. I'm using the word tokenized securities because we see these as securities very much. These are securitized assets. These are real world assets which are securities, and simply we are adding a layer of technology to tokenize them. It doesn't change the characteristics of the nature of investment. So as some of our other panelists have said, there have been many challenges in the industry. Still, regulation across the globe when you deal with global investors is very much a challenge today, and figuring out how all of this works, because in many cases, most people don't know, the difference between tokenized assets, cryptocurrency. All of it sounds the same to many people, but I think as time goes and as more assets become tokenized, I see this as being the most widely used manner in which investors will be able to participate in private market investments.
Awesome. Thank you so much for that answer. I have another question for you. What types of real world assets are most suitable for tokenization and why?
Yeah. So traditionally, assets which are large in size in terms of value, that require some degree or major degree of management, because the minute you have, say, a building which you're tokenizing, a building cannot be, you cannot have a fraction and operate it on your own. Typically, these kind of assets require management, leasing, upkeep, maintenance, all these kind of things. So a real estate asset typically held in an entity is very ripe for tokenization. I think people sometimes misunderstand fractionalized ownership to mean that you have a certain amount of square footage in a building. Typically, tokenized securities don't work like that. It's like a share in a company, and the company owns the asset. So here, a token will represent your fractional interest in an entity, and the entity owns the asset. The entity needs to be managed and looked after and maintained, and then eventually sold at the right time. Similarly, while we've been while we've been exploring other assets to be tokenized, another asset class which has some of the same pain points as the real estate industry is venture capital. Typically, venture capital is funds. Venture capital. A lot of people participate in venture capital through funds. Typically in India, these are close-ended funds which have a 7 to 9 year life. investors get stuck. An investment manager or the asset managers have to time all the exits towards the closure of the fund. So we feel that venture capital is another great asset class that will really benefit from tokenization. It will allow people to participate. It will allow people to get in and out of that asset class. We can also de-link the investor's exit from the fund or asset and the asset manager's exit from the asset as well. So it really could become a game changer for the VC industry, for the real estate industry, where again, in real estate funds, asset managers typically have to, in a close-ended fund, they have to exit the asset within a specified time period. Now, as we all know, it's very difficult to time exits with the closure of a fund. There may be so many circumstances. It may not be the right time. The market situation may not be ripe. So it would be better for a real estate asset to be in an open-ended fund. We believe the way we are structuring our business, and investors can get in and out. So early stage investments could come in from investors who have a potentially higher risk appetite, because they take the execution risk for a project, a greenfield project that comes on at the early stage. And then they could make way at a later stage of the project, once it's completed and leased out, for investors who are looking for a more stable return and less risk. So this kind of merges the benefits of a venture capital fund or a fund and a REIT. It takes away all the disadvantages and brings all the advantages. So we see particularly real estate and venture capital, but art, any other real world asset that needs to be that will benefit from being tokenized, which is large, which is very large in value, which creates a diversification risk or a lack of diversification risk for an investor, is suitable for tokenization.
Awesome. Thank you so much for that. I'd really like to thank all of you for giving your time for today's session. Thanks, Nida. Thanks, Shan, Sanya, and Jeanette. And I look forward to many more sessions with all of you. Take care. Bye-bye.
Thank you.
Thank you.
Hi, thank you.
Thank you.
Bye.
Bye.
Bye-bye.
So for the next session, which is going to be on legal and regulatory landscape for tokenization. Just give me a second. Let me. So let me just quickly introduce that session. So in this panel discussion on legal and regulatory landscape for tokenization, we're going to discuss the current legal and regulatory environments surrounding tokenization, recent developments in different jurisdictions, and best practices for navigating the regulatory landscape. So I have the panelists with me, but could you, Shuchi and Debashish? Yeah, okay, awesome. I can see you guys. And okay, if you are able to hear me, if you could just put on your video camera also. Not able to hear me. Okay, I'll start off with alphabetically introducing first Debashish Nayak. He's a blockchain and crypto law counsel. So Debashish Nayak is a seasoned lawyer specializing in blockchain and crypto law. His expertise extends to IT law, software copyright, e-commerce law, and legal consultancy for internet-based businesses. His in-depth understanding of online gaming law, electronic signature law, cybercrime law, intellectual property law, and the legal aspects of distributed ledger technology and cryptocurrency makes him an invaluable asset for our discussion today. Secondly, let's check. Yeah, okay. Shuchi is here. So Shuchi is a co-founder of the Asian School of Cyber Laws with a postgraduate degree in mass communication and a passion sparked by her BSI certification. She's led the education front for over 2 decades, training an impressive number of students in various fields of law. As a business owner, creator, and enthusiast in blockchain law and cryptocrime investigation, she applies 23 years of experience in cyber education to tackle the and regulatory challenges in the rapidly evolving blockchain technology landscape. Okay, if you are able to hear me, if you could just
Yes, yes,
if you could just
absolutely.
so Devashish, you can hear me, and Shruti, you're here.
Yes.
Okay, I think you're not able to hear me. I'm guessing you need to unmute your video camera. So anyway, let's start off with Devashish. So Devashish, the first question for you is the Securities Exchange Board of India, or SEBI, recently released a consultation paper on the fractionalization of real estate. What do you think this means for the tokenization ecosystem in India?
Interesting question, Ras. What it means is basically that SEBI has, there's a proposal, of course, in the beginning. As what SEBI has proposed and has invited trusts registered and their units also to be traded across the stock exchange, and that's what they've said. Their proposal is this, that if a platform wants to tokenize real estate, in fact, I will not use the word tokenize because that does not figure in SEBI's consultation paper anywhere. What they're talking about are and those shares obviously will not belong to the property itself, because owning fractional shares in property have registration requirements that are complex. So like any other proposal, what SEBI wants to do is to have these platforms called as MSM REITs, or micro, small and medium real estate investment trusts. They are to be mandatorily registered with SEBI, and whatever properties they want to fractionalize, they're supposed to have SPVs.
I think Devashish is facing some internet issues. So, yeah, Devashish, I think you had gotten disconnected. Yeah, now we can hear you, see you again. You could.
Okay.
Yeah.
So I'll just repeat that. I'm saying that what SEBI wants to do is to have mandatory registration of these real estate tokenization platforms. In fact, again, because I'm so used to the word tokenization, I'm constantly, using the word tokenization there. So what I'm supposed to do is to use the word that SEBI uses. It's fractionalization of real estate. They do not use the word tokenization, as I said. What they want to do is, am I audible to everybody?
Yes, you are.
Okay. So what I'm saying is this, that they want to have these REITs, or real estate investment trusts, compulsorily register with SEBI, first of all. And if they're registered with SEBI, they have to satisfy certain eligibility requirements. Their sponsor has to have a liquidity of up to 20 crore rupees, out of which 10 crore has to be in real liquid, either treasury bills or cash or whatever. They also have to have a professional investment manager, and the units, which consist of minimum ticket sizes of 10 lakh rupees according to SEBI, are to be listed on the stock exchange and it will be traded as such. So once we talk about those fractional interests listed on the stock exchange, which is recognized, then there is no question of tokenization. The word that is used by SEBI is demat shares. So there is no mention of any blockchain. There is no mention of any tokenization. There is only mention of demat. And when we talk about demat, we are talking about recognized stock exchange. Therefore, the blockchain platform that we have all been talking about is redundant in the scheme of SEBI. So that is something that we need to really understand. And also, the fractionalization platforms themselves are to be set up as trusts. They are supposed to hold SPVs, the SPVs are supposed to hold the properties, and the investors are supposed to buy shares in the SPVs. This is how it is to be structured. There is no question of tokenization in this scheme.
Awesome, Devashish. I have another question for you. Can you discuss some of the key legal challenges and ambiguities that are faced in the tokenization process, and how are these being addressed at a regulatory level?
So I think the question will probably span two different or multiple jurisdictions. Uh, the important thing is to understand the basis of tokenization. Tokenization is nothing but trying to give value to something, provided we are talking of tokens backed by real things, by by assets which are of value, then basically we're talking about tokenization in the form of fractional ownership, whether we're talking about intellectual property, or we are talking about shares, or we are talking about real estate, or we are talking about any physical object that we want to own. Tokenization is basically breaking it up into small parts. Now, what jurisdictions across the globe, most of them, if we talk about certain states in the US like Wyoming or Utah, they have come up with specific regulations which talk about tokenization, which talk about blockchain platforms, which talk about putting shares in tokens and then putting them on the blockchain. Or we talk about Malta, which also has specific regulation relating to virtual currencies. Except a few jurisdictions, what we see is a general trend of trying to stretch existing laws to apply to tokenization. For example, if you look at the US, barring certain states, there is no federal legislation. Because there is no federal legislation, whenever we talk about ICOs, we talk about token sales, depending on how those are positioned, existing security laws are applied to them, which is why we see a lot of movement in the US against all companies and exchanges which are into token sales. If we talk about India, for example, there is no specific law on tokenization, but because the government has moved ahead to tax all crypto transactions, therefore, we feel that there is an implicit recognition to crypto tokens which have not been outrightly banned. So what I'm saying is basically clarity in regulation is only relating to a few countries. There is more ambiguity because in the absence of regulation, we are trying to apply what we have to a concept which is new, to a concept to which probably applying these existing regulations will be too much of a stretch. So that's the challenge. At the basis of every regulation, we'll have to look at how ownership is to be distributed and how we can regulate this with contracts. In a transnational sense, if we want to enforce contracts, it's a very difficult task because it becomes multi-jurisdictional, and therefore we'll have to look at arbitration probably as a legal means of enforcing that. And if it is not legal, then the platform has to come up with new and interesting avenues, such as putting things in escrow, not releasing them until the transaction is finalized, etc., etc. So there is a lot of work that remains to be done in these areas.
Thank you so much, Devashish. I'd like to welcome OK. How do I pronounce your name?
Okay, it's fine.
Oh, awesome. Awesome.
Yeah.
So let me give a quick sense. So OK Omenu is the chief economist at the Securities and Exchange Commission of Nigeria. With over 2 decades of experience in finance, asset and risk management, his credentials are notable, holding designations like CFA, FRM, FCCA, along with an MBA and a PhD in finance. Known for his versatility and goal-oriented approach, we are eager to gain from his valuable insights. The first question that I have for you is, what is the vision of the Nigerian Securities and Exchange Commission concerning blockchain tokens and cryptocurrencies?
Thank you, Rojas, for the kind introduction. I'll quickly say that the Securities and Exchange Commission Nigeria sees tokenization as a way to bring in a lot more people into the capital market. You see, Nigeria is a young country. When I say young, I mean in age. We have a very large youth demographic. And there's been that tendency for the youths to want to access investments, access the market through the use of these new technologies, as I may call them. So we've identified tokenization as one of the areas through which we can expand the market, we can increase the opportunity set. And so we have a good disposition towards them. Like the previous speaker said, regulators all around the world are finding it difficult to grapple with these things because they are not the traditional instruments or products that we used to know. So our disposition is that we want them, but we want them introduced in our market in a way that enables us still fulfill our mandate of investor protection. So we want them to be safe. And what we've seen in our market is that we've had, over the past, say, 3 years, a few operators who have come in, haven't gotten regulatory approvals, and have ended up causing a bit of problems in the market. So what we have done now is to create rules around them. However, in creating these rules, we have to navigate the stance of the central bank, the monetary authority. So what we are doing now with tokenization is that we are concentrating on the asset-backed tokens. We're not touching the cryptocurrencies and things like that because of the stance of the central bank. The central bank in Nigeria does not support it, has asked that bank accounts not be made available to people who trade in cryptocurrency. So for now, even though we are open to it, we have kept that aside. But asset-based tokens are very much in play in Nigeria, and we have put set rules for them. We have also, maybe I'll talk about that later. We've also created a regulatory incubation system to allow these tokenized assets or companies or promoters of these tokenized assets to be able to bring them into the market safely. So that's something else we are doing, and we are seeing quite a few of them coming into the commission. The general belief in the commission is that it's better we regulate these things. It's better we have them, under our wings, or we have an eye on them than to just let them be in the market. So that's the stance of the Securities and Exchange Commission in Nigeria.
Awesome. Thank you so much. I have another question for you. What can you tell us about the regulatory incubation planned by the SEC for asset-backed tokens?
Oh, okay. We have that, we've introduced that, and we are now inviting, or we've been inviting applications into the incubation program. And the incubation program is simply a program that allows people with such ideas to come in and get into the program for a year. In getting into the program, we assess what the product is. We assess the risk, aspects of it, and what management, risk management, arrangements have been made. And we try to ensure that the products and the way the products are going to be offered are in line with the rules, regulations, and laws of the country. So basically, we have an office that has been created to help guide. We look at them as a guide, as an office that guides these products gently into the market. So the incubation program just helps. Presently, we have 11 applications in that program. We've approved one. We are working with the other 10. We find that many of the products that, or many of the ideas that come into that program have two legs. I would say a capital market leg and a monetary leg, a payment system leg. So that sort of has given us a bit of challenge. That's why we haven't been able to onboard as many as fast as we would want, because the payment system, the payments leg of it goes to the central bank. So we have to engage the central bank and all that, and we've had to advise some of them to modify the products. So in a nutshell, the entire regulatory incubation program is designed to help guide ideas, help guide products around tokenization into the market, to ease them into the market gently, ensuring that they are within those guidelines, those rules, those regulations, that they don't run foul of any law. And in doing this, we've also had to touch some of our previous rules and regulations. We've had to, we always like to say that we've had to bend over backwards without losing sight of our mandates, which is one of our mandates, which is investor protection. So we're happy with the incubation program, and we are ready to modify it as we go to suit what we want, but we are very careful to ensure that our investor protection mandate remains fulfilled.
A small question, are foreign startups also allowed to apply for the regulatory incubation, or is it only for Nigerian startups?
Of course, the foreign startups are allowed to, but of course they have to go through the rules that we have. They are.
Awesome. Thank you so much for that. Shuchi, I have a question for you. What role do regulators play in the tokenization of real world assets? And what are the main regulatory challenges and considerations in tokenization?
Hi, Rohas. First off, thanks for making me a part of this. This is very exciting. I believe regulators have a very critical role to play in this entire space. And I believe that the law, as far as tokenization is concerned, is going to have to be broken into two parts. The first part will apply to assets across the board. This will include stuff like say know your customer, anti-money laundering laws, combating the financing of terrorism, freezing of funds, consumer protection, or as OK mentioned, investor protection, right to be forgotten regulations, and data privacy laws. The second part is where things get a little more complicated. These will be regulations which are specific to the assets that are being tokenized. Now, these would include assets like, say, for example, aerospace assets, or as Sanya was speaking about it, aviation assets, carbon credits, copyright licenses, financial investments, infrastructure, maritime assets, mining and mineral assets, real estate. Now, we've had people in the previous session speak about all of these, but if you realize a large part, one of the roles that need to be handled very delicately is a lot of these assets already have existing laws which regulate them. So to have those laws now align with the tokenization laws is going to be one of the challenges that regulators will face. The concept of tokenization of real world assets is relatively new and still unique to people. So, if we want a huge investor base coming in, there is going to have to be a two-pronged process to it: awareness and acceptance. Now, I believe awareness will grow through regulator led education. This is how it has worked out even in the past. What about acceptance? For decades now, I believe people have trusted regulators with their banking needs, their insurance needs, their pensions, basically their life's money, right? Why should it be any different for asset tokenization? Trust in the tokenization process will have to be built via regulators. I hope that answers your question.
Absolutely. Thank you so much. And the second question that I have for you, do you foresee a positive response from government and regulatory bodies to asset tokenization? And are there any examples currently?
Well, I'll come to the examples later, but because we've seen a lot of those. Asset tokenization brings several advantages to both asset owners as well as investors. But unfortunately, the novelty of the technology and the concept have had countries and jurisdictions react very differently. So some have approached it with a very progressive and open approach, and others have become very restrictive in their approach. Now, it's my belief that despite regulatory challenges, governments and regulatory bodies will have to realize the economic benefits of regulating and accepting this technology. Countries that have led the regulatory charge for asset tokenization include the efforts made by, say, for example, Switzerland, which has created a legal framework for tokenization of assets. And I believe there's also been a bank which has actually tokenized its own shares. Then there is Singapore. The Monetary Authority of Singapore has also developed a legal framework for tokenizing assets. Then there is Malta, as Devashish mentioned. There are also jurisdictions like Utah and Wyoming. And of course, I have to mention, I was very impressed with the kind of steps that are being taken by Nigeria to have investors come in and to have asset tokenization take place. As we heard from OK also, you can see across the border, the government is trying its level best that while there should be investor protection, you try to make it as easy as possible for assets to be tokenized by jurisdictions, right? And of course, that brings me to the Indian government. The Indian government has also set up its international financial services center at Gandhinagar, Gujarat. And it's promoting this for various blockchain use cases, including asset tokenization.
Awesome.
Yeah.
Is there anything else that any of you would like to add here at this stage? Debashish, okay, Shuchi, if there's anything else you'd like to talk about?
Okay, thank you, Rojas. I would like to say that regulators around the world have to cooperate. There's some work being done by IOSCO, and then even on the banking side around tokenization. Because we are getting different experiences from different parts of the world. So we have to cooperate to, really get a hold of this. A lot of regulators around the world are a bit are taking a stand and look a stance, and I think it's a wrong stance because even the traditional instruments we have now were once new instruments and were looked at with suspicion. So I think that the best thing is to view them as opportunities for growth, and then bring them in and have an oversight over, on them. Because whether we like it or not, these things are going to happen. If you don't allow them come on board, they go under, they go underground, and that's a worse scenario. Thank you.
Awesome. Oh, that's very well said. Debashish, Shuchi, is there anything else you'd like to add?
Yeah, so Rohas, I would actually want to mention this. One, of course, being an educator, I realize that most likely that kind of education and awareness needs to be brought in at a level where students, where law students, where anyone who's dealing with this ecosystem learns about it before they enter the space. That's one. Two, I believe today a lot of fear also exists because of unsurety or uncertainty of regulations. So I believe that while taking care of consumer protection or investor protection, that unsurety needs to be taken away as much as is possible. And I believe that even banks, which as of right now have a very conservative approach for the most part, will be far more open if this uncertainty is taken away.
Awesome, that's very well said. Debashish, would you
Another
like to add
aspect,
anything?
yeah, what I wanted to say was this. The tokenization technology-wise opens up a whole new global front. Now, when we talk about a global front, we're talking about transnational transactions. Therefore, we probably will have to, in the near future, look at something where everybody has to agree to a consensus on when there is a dispute. Those will happen. They're bound to happen at some point of time, sooner or later, as transactions improve, they increase in size as well as in velocity. There will be instances where disputes will arise. Given that situation and scenario, what we need to do is to probably move towards some sort of a consensus globally as far as possible as to how to settle these disputes. The moment we're talking about investment treaties and big companies and commercial disputes, arbitrations, big ticket arbitrations, and we have the New York Convention to do that. But on an individual level, I think to bring in that trust, unless the platform is innovating technologically and doing something, we'll probably need to have this sort of an arrangement very soon. Right now, it is cumbersome. It needs to be more refined. If I have to enforce something in a foreign jurisdiction, how do I go about it? Whether they will enforce it as easily, whether I'll secure my assets if I have traded them through a token, that is a question that we'll need to solve very soon.
Awesome. Thank you so much. So I'd like to thank the three of you, Debashish, Shuchi, and OK. Thank you so much for your time. And I look forward to interacting with you a lot more in the future.
Thank
Bye-bye.
you. Thank you.
Thanks, Rohas.
Thank you.
Bye.
So, so we have a few minutes before the next session starts and the final session. So let me just take some of the interesting questions that I can see. Question is how artwork by hand and AI art can be differentiated, and can artwork by hand be tokenized? So, well, both kinds of art can be tokenized, whether it's human made or AI generated, because both of them would enjoy the same level of copyright protection under the law. Both of them can be tokenized. As far as differentiation is concerned, as AI is getting better and better, it's becoming more and more difficult to actually differentiate between what is generated by a human and what is generated by AI. Hope that answers your question. I saw some interesting questions from Alina. Let me just take some of them. Give me a second. So one question is what one needs in order to launch a compliant token. So as I think was mentioned by Shuchi in this panel discussion, when we talk about regulatory compliance for a token, it has to happen at two levels. One is at the level of the asset which is being tokenized. So if it's an aviation asset, then the aviation laws need to be complied with. And the second prong is the generic blockchain related compliances like KYC, anti-money laundering, data privacy, right to be forgotten legislations, and freezing of assets. So we need to take care of both in order to launch a compliant token. Hope that answers your question. There's another one from her. How can a user comprehend all the details of a deal and check the security of the processes on a particular blockchain platform? It seems to be necessary to become a blockchain developer and a layer and a smart contract auditor. No, don't worry, you don't need to do all that. See, today when you use, say, a stock exchange to buy and sell mutual funds or debentures, or you are using the commodities market to buy and sell metals like gold and silver, you do not need to get details of the technology. You don't need to go and try to do a security audit of the technology on which the stock exchange runs. Similarly, as an end user investor, you don't need to do any of this. This is what would be done by the person running the exchanges, by the developers there. As an end user, you wouldn't need to do any of this. Hope that answers your question. Okay. There's another question about how can you make a difference between NFTs and tokenization? So NFTs or non-fungible tokens are a type of token. They could represent a tokenized real world asset, or they could represent a digital asset like digital art, for example. So NFT and tokenization are not really comparable. They're like apples and oranges, quite different from each other. Tokenization could include NFTs also. Okay, another interesting question here is how to differentiate between secured and non-secured tokens. So that's a very good question. So whenever you're going to be buying a token, you would have information available about that token, and that information would include what is the asset backing it and what is the level of which to which that is secured or non-secured. Now, ideally speaking, almost every real world asset that is going to be tokenized is going to be backed in such a way that you can get control of that asset, or that asset can be sold and you get your money back. Now, if that particular asset happens to be an unsecured debenture or an unsecured debt, automatically then the asset also, the token also in a way becomes unsecured. So this question about whether it is secured or not would depend upon the underlying asset. Somebody wants to know about, yeah, I'm interested to comprehend all these details. Any learning opportunities? Sure. So I shared the URL of my book called the Tokenization Playbook, which you can freely download. And I think that would help you quite a bit. Let me just put the URL for that again. Just give me a second. So I'll just share the URL again. Feel free to download the book from there. Freely available. Yeah, I think those are the questions that I can see so far. If there are any other questions, please put them while I'm waiting for the last panel to arrive. I hope I'm audible and visible to all of you. I seem to be facing a little bit of an internet challenge here. Could you just give me an all clear if you guys are able to hear and see me? Yeah, Ritik, thank you so much. Are you guys able to see and hear me? Awesome. Okay, so let's get ready for the last panel. I'm waiting for the panelists to come on board. Just give me a few seconds. Let me figure out what the problem is. Okay, awesome. So while I'm waiting for the panelists to come in. If there are any other questions that you have, please feel free to put them. Hi Vikram, how are you doing?
Yeah, hi. Just give me a minute. I'm getting my earphones.
Sure.
Just a second.
No, not a problem at all. So I think I've shared the URL. Give me a second, I'll share it again. For the tokenization playbook, which you can download for free. There's an interesting question here. Can AI create smart contracts and deploy it to the blockchain? Well, yes, AIs can create smart contracts. I've tried it. I'd made an interesting post on this also on LinkedIn some time ago, where I used ChatGPT to generate a smart contract. Yes, it is able to do it. Only the deployment part's a little difficult for the AI because you need to pay the gas fee to actually deploy the contract. So that is where actually the human beings would come in to do that. So hi, Vikram. Let me just quickly introduce you. Give me 1 second. Yeah. Okay. So Vikram Pandya is the director of fintech at SP Jain School of Global Management, where he has designed Asia's first interactive classroom-led fintech program featuring blockchain, API banking, AI/ML, and IoT labs. He's authored several white papers and articles in the fintech domain. He has extensive experience in banking, financial services, fintech, consultancy, and training domains. He's founder and director of the Association for Emerging Technologies, a not-for-profit ecosystem initiative. He's also associated as a mentor with various fintech startups and fintech-focused funds across the globe. He's a fintech ambassador for Maharashtra government's Uday Fintech platform. He's also heading the research arm of fintech VC fund Verenium. He has been a successful banker for more than a decade, where he has made key contributions in financial and investor strategy, business intelligence, balance sheet management, and business development and tech solutions. And he's been a visiting faculty at various prestigious global institutes. Thank you so much, Vikram. And let me quickly begin with the questions for you. So, what role do you think insurance will play in the process of tokenization?
So very good question. When we think about risk, right? In any tokenization, whenever we talk about risk, and there are multiple types of risk, as we already know, I think insurance adds to the overall confidence that the ecosystem can derive. And nowadays, we are talking about specifically solutions which are, let's say, reversible smart contracts, and we are talking about ERC20R and ERC 721R. And specifically, when it comes to this, I think the smart contract insurance will play more critical role going forward. And there are two separate views that people talk about this, right? One is that if the insurance is there, you are still trying to create an ecosystem where reversible transactions are there. So insurance can just provide security on the remaining 50% of the time, or remaining errors that you find in the smart contract. And another thing which people believe is that smart contract or any transaction can never be reversible, because then it removes that immutability and trust and all those things. That is the another thought process that you have. Now, when we look at these two different schools of thought, I think insurance, however, will still make sense, given that you are able to create more complicated products. With the help of insurance, you can create a few more complex products for institutional investors, not for the retail purely, but also for institutional investors. And insurance will definitely help in creating those enhanced products, or structured products, as we call it. Any related questions you have, feel free to ask.
Awesome. Thank you so much for that. Yes, you can put in your questions in the comments. So Vikram will handle them. The second question for you is, as the tokenization field evolves, how do you foresee the landscape of security and risk management changing over the next decade?
Interestingly, if you look at last 1 year or so, right, even after COVID and before COVID, you already had differentiated risk vectors, or attack vectors in a way, as we call it, for this entire smart contract. Community wise, if you look at, people were looking at a new sort of solution, but the security was always the afterthought. Now, during last 1 year, you must have seen that people are looking at security by design. And when we are talking about how going forward, it may evolve. I can tell you that there are secure standards which are getting developed. Along with that, tokenization itself, when you look at embedded security as a part of tokenization, you are talking about one layer of security which is there as a part of your smart contract, which can help you remove certain issues while coding. So you have frameworks similar to how you use your Python framework or Java framework. You are talking about smart contract framework. So security is coming at that level as well. And then you have security, which is embedded security plus additional security on top of that, which we can call that as encompassing security. And within the container, you can create and destroy the smart contract on the fly. And today, by using even, let's say, distributed computing, I'm not talking about purely decentralized only, I'm talking about distributed computing, which means that you can have a centralized party in enterprise security also. If you think about it, you can have trusted execution environment, or TE as we call it. And using TE, there are multiple different memory level of securities that people are able to create. And this security, specifically when it comes to how people interact with the smart contract versus how it is getting executed in the backend, both these sides are getting covered as a part of that. When we look at smart contracts from the layer perspective, rather than the technical specification, as we know, OWASP standards are mainly for, let's say, network and all those things. Even if you apply those things, it is not enough, because smart contracts are much more than what you can think about in the traditional sense of security. And because of that, when we are talking about smart contract, you are going to require additional framework for the security. And there are three most popular security frameworks which people can easily find on the net. And one of them specifically looks at how in-memory security also works, which I was talking about on TE side. So this is something which is evolving. Another point which I was going through very recently, and one of the Stanford researcher also was looking at this sort of security, where you decouple identity layer from the transaction layer, and you are able to call that identity layer to re-verify certain transactions. By doing so, you can also make sure that you are able to have compliance embedded as a part of your token. And whatever security is required, or whatever, let's say it is data protection security, or whether it is something which relates to a country. For example, from India, you cannot send data outside of India for certain transaction. So all those kinds of compliances you can embed as a part of the smart contract, which is there as a part of your token. And your token itself can be a self-compliant given the identity layer of the individual who is doing the transaction. So token itself is a dynamic token, but you have individual whose identity is deciding whether this token will follow the regulation of X country versus Y country, or X geography versus Y geography. Similar to that, if that entity is banned, for example, using KYC AML, you figure out that, okay, this entity cannot do this, then automatically that will trigger the smart contract, which is going to be part of your token. So this is what I personally believe will change the way people think about how tokens should be used and how the token security should work. And along with that, how the token compliance should also work.
Awesome. Thank you so much for those very detailed answers. I can see Saurabh has joined. Saurabh, would you be able to switch on your webcam? We are not able to see you.
Hi, just give me a sec.
Yeah, yeah, sure, sure.
Okay, thank you. Okay, first of all, really sorry. I got mixed up with the time zone differences,
No
and
problem.
I was supposed to join an hour late. So,
Okay.
sorry
No
for
problem.
that.
Let me just quickly introduce you first. Give me a second. So, Saurabh Kumar is a dynamic figure in the blockchain and digital assets industry. Known for his instrumental role in the global adoption of cryptocurrencies, Saurabh has worked with 23 government and non government agencies across 12 countries under the banner of the World Crypto Council. Welcome, Saurabh. And
Thank
the
you so
first
much.
question that I have for you is, can you explain the importance of KYC, that's Know Your Customer, and AML, that's anti money laundering, security of tokenized asset trading?
Definitely, definitely. Rose, before I, go on about answering your question, I'd like to give a brief background, okay, why AML and KYC is important and for whom it is very important. So, for any trading platform or trading of as we are talking about tokenized assets, right? So there are three different set of people or three different sides of this particular trading aspect which are instrumental. So one is the governments, okay, or the agencies who are the regulators mostly. Second is the customer or the client, and third is the business who's catering this particular client, or an exchange or something of that sort, or a broker, right? So KYC and AML is important for all three of them. Okay, and this is and the thing is that as far as I'm concerned, like I run a company called World Crypto Council, so we deal with a lot of crypto companies, crypto exchanges, and you might have heard, in last few days, SE, sorry, SEC suing Coinbase and a lot of different companies in US, and the reason why they are trying to you know put kind of a ban or kind of curtail their trading trading volumes and things like that is because these companies were not able to fulfill all the KYC and AML policies, because uh, like you might know that a non-US company cannot onboard a US client and ask them to trade on their platform. So it is really important from the regulators standpoint, because they want to know who's moving the money, where the money is going, how the money was procured, and what other things that is being done with that particular amount of money. So they want kind of a control in this particular scenario, and the businesses like the exchanges or brokers or platforms, they want easy onboarding for the client. So let's say they have an online app, and at times they are very lenient with KYC or onboarding of the customers, and they are not able to check whether I used for, let's say for example, I used a forged passport or a forged Aadhaar card in India or a PAN card to register my account. So they don't have or like the robust system to actually check whether this is an expired passport or a forged one or something like that. So this creates a problem, because when the money trail comes in into the picture, when there is an audit, the regulators find that there is a small gap between what was informed and what's happening. So this is one thing. And from customers point of view, yeah, obviously it's very important, because uh, like if the businesses or the regulators know who is dealing in what commodities or assets, or who is doing what, it actually safeguards the hard-earned money of each and every investor who's putting in their money on that particular platform for this trading. So yeah, to answer your question, in
Awesome.
just one line, it's like really important for each and every individual or business or regulator involved in this particular transaction across the globe.
Thank you so much for that. I have another question for you.
Mhm.
How can individual investors ensure that their tokenized assets are secure? What steps should they take?
Okay, so from an individual investor's point of view, the first and foremost thing that they should look at is the platform or the broker or the exchange where they are, are planning to trade or put this tokenized assets. Like for any platform, the first thing they should check is whether it is regulated or not. Okay, where it is based, what kind of policies they follow, what kind of licenses they have, and few basic parameters if they are trying to uh, trade into this tokenized assets, because normally you can only trade online. Okay, there are offline traders, but those are very few, and it's absolutely like it's very risky to deal with them. So first thing is that they should check where they are putting their assets for trading. That's one. Do a kind of a small due diligence or a background check on the business or the platform involved. And the second thing is that when they are not, like I'm talking about tokens, for example, when they are not, trading in the tokens, we just want to, keep this particular token. Like let's say I or you, someone buys a token, and they just want to keep it for a long-term prospect and not trade into that on a day-to-day basis. Then they should obviously keep that into, a ledger kind of thing, sorry, a cold wallet, and keep it safe with them with IDs, passwords, whatever they can use. So these are, like
Awesome.
from yeah, from her perspective, these are the two very important things that one should look at.
Awesome. Thank you so much for that. Vikram, there's a question for you. Let me just pull it up on the screen. Yeah. So for tokenization, what's better, private consortium or Ethereum-like public blockchains?
So it depends on what kind of use case that you have. And let me give you a simple example, right? You need to ask two questions in a way. If you are talking about private permission, public permissionless, private permissionless is something which is not that useful, but you can have public permission as well. Now let's talk about a scenario where RBI is trying to create a consortium of all the banks put together, and RBI is saying you share the data. Whoever is sharing the data more, they will earn some token, and whoever is consuming, they will require the token. In that case, you clearly require a private permissioned blockchain. Now, private permission blockchain, in that case, if you think about it, right? Now, Ethereum, when we look at from the perspective of what it can be used for, is not directly suitable. Of course, you can modify it for your use case, but then in that case, maybe R3 Corda or Hyperledger, I think those are more useful than just using something which is providing some solution which is very, very not user friendly for the purpose that you are looking at. Similar to that, let's assume a scenario where government is trying to create a land registry where you will be able to see that who owns the land, and once you identify who owns the land, based on that you can decide whether to buy or sell, and after the transaction is through, you want to transfer that land on the new buyer's name, right? In that case also you have two blockchain requirement. One is public permission and another one is private permission. While of course people may think private permission is good enough, public permission where people, anyone can join and verify the ownership before even buying it. Well, private permission only for people who are owning the land, and government can invite them join this blockchain, so that there is this community of verified buyers who are there. And then you have public permission, for example, sitting on uh, top of that, where government can allow people to join and then verify the ownership of the entire land registry. Now this is the hybrid use case again. So it depends on public permission. You can use Ethereum blockchain easily, that is fine. But for private permission, it depends on what is exactly that you want to achieve out of that. I will recommend same way the use of your Hyperledger.
Awesome. Thank you so much for that. Let me just quickly welcome Mr. Prasanna Lohar also. Give me a second.
Meanwhile, I think there is one more question, but I think you can cover that later.
Sure. So, hi, Prasanna, how are you?
I'm good, Rohas. Good to be here.
My
Good to
pleasure.
see Vikram out here. Yeah.
Let me just quickly introduce you.
Yeah,
So, Prasanna Lohar is a seasoned innovator, digital architect, and banker with over 23 years of diverse industry experience. Prasanna's accomplishments span multiple roles from CEO and founder to global leader and board member, shaping his expertise in areas such as fintech, metaverse, cloud, and blockchain. Known for his strategic acumen and his considerable experience as a technologist and innovator, Prasanna is also an influential speaker, mentor, and team builder. So, welcome. Thank you so
thank
much
you,
for your time.
Rohas.
Let me ask you the first question. What are some common risks and security challenges faced in the world of tokenized asset trading?
Okay, so I think a good question, and as everybody knows, this area wherein we are talking about asset tokenization and top of that asset trading, which is something new. New in the sense, the overall market who is operating this kind of a business model is not much regulated. So your risk starts from there. When something is not regulated, your risk, which is typically around customer experience or handling customer disputes, these are not documented or standardized somewhere anywhere in the document, except few of these countries. Now, depends upon country to country. We can always look at what more risk will come. But primarily, I can, in a nutshell, I can say that some regulatory risk, wherein sometimes regulator has some norms. There are some countries they are changing their laws almost weekly basis these days, right? The countries who were very okay or good for a tokenization few years back, they are saying no to that. Like we have seen how these rules change in Singapore or even US. I think uncertainty around regulation is a big task or a big risk around. Apart from that, how do you manage liquidity for those funds? Then how do you take care of investors? How do you take care of investor disputes and inquiries? How we can handle that? And apart from that, but typically, as we say, the way banking works, banking is normalized with lot of regulation, and it is quite robust enough considering liquidity, considering the supply chain of a complete money. That kind of ecosystem we don't see inside a asset tokenization relevant trading. These could be some domain relevant risks, but on a technology per se or availability of the channels, the way we have open channels available everywhere for communication, there are very limited channels available for this trading, and these are all private channels. Other areas on technology side, all these channels works on different blockchain protocols. Maybe they are not interoperable. While in the sense interoperable, if you have some asset tokenization done in one area, it may not be interoperable to some other area. That needs to be evolved. I think these are some risks, or and it will evolve, right? The way we see the market, the way we see the push for various government, various countries. Certainly, this risk and security challenge will evolve. I think this industry needs to work closely with some regulator or work closely with some domains who has already evolved these channels since last 30, 40 years. Example, banks. The way banks has evolved on all of these common risks and security challenges with some standardization will really help. Yeah, that's in nutshell.
Awesome. Thank you so much. I have one more question for you. How does the interoperability of various blockchain platforms affect the security and risk management in tokenized asset trading?
Yeah, so I think this is again a wonderful question. Now, say example, if you talk about Ethereum, or if you talk about there are other platform where you can create this tokenized asset trading, and moreover, these platforms are not interoperable. Okay, other area is that example today we do some real estate tokenization under one builder or under one real estate company. They may not would like to have a create a interoperable T with some other ecosystem. I think these are some challenges which will really affect over a period of time all of these business models. The way we have seen in the Web 2, we have APIs or we can do the data exchanges. There are some standards around that. So like there are a lot of OWS standards where we can say this is how API should be triggered. This is how we can exchange those data. I think that needs to be evolved. So today, Ethereum, or you talk about Binance, or there are other platforms which can be typically used for building these ecosystems. They may not have anticipated there will be tomorrow need of a same token to be operated in another area. So now the way we have there are many more concepts which are coming on multi tokens where it can be operated within one organization in two ways, or one organization would like to have a facility for the end users to use the same token in multiple other ecosystems. So I think as business model will evolve, I think that this dilemma around interoperability will really help. Moreover, every blockchain platform has its own attention towards scalability. Some of them use based upon what consensus algorithm they use. That's also we need to standardize. Example, suppose one token platform which is built by one bank is operating on some platform which is not scalable compared to the other platform, also will affect that trading kind of ecosystem. I think the way we always talk about blockchain trilemma, which is around decentralization, or we talk about security and interoperability, that also touches upon these kind of security challenges or interoperability challenges around any of those asset tokenization platform. But I think the way many banks are talking, or if you talk about banking ecosystem, they are creating their own platforms or norms. We have seen how JP Morgan along with the ONX and some other banks has come together to do this kind of research. I think over a period of 2-3 years there will be a lot of standardization around these areas. because what we say token economics is something new, but it will prevail a long period, and banking will have their own roles as far as trust bodies are concerned. I think technical challenges will keep evolve, but what I see that these challenges around what consensus algorithm we are using, or how much what is that we have as a development tool and relevant resources, how we are doing coding of a particular smart contract, is it vulnerable or not, and as we have not having any standards, we need to undergo some kind of a traditional VAPT followed by smart contract kind of audits. So that is to be evolved, right? There are very few companies, and those companies are very costly to say that how they can validate these kind of platforms. So I think apart from a technical challenge, I think we need to see the maturity of governance, maturity of policies around this, how these platforms will integrate easily with the existing platform, because that's how it will work. Example, one token platform has to integrate easily with the existing core banking or banking platform, which will evolve overall adoption. And moreover, any platform the way we are utilizing, right? Say any blockchain platform, they come up with their own limitations or their own advantages. I think in a nutshell, if you have to see long-term adoption of tokenization, where we will see today, we talk only about maybe real estate tokenization or logistic relevant things, or we talk about something media and entertainment. Eventually, more than 300, 400 entities will go under tokenization, and we need better interoperability on all of this tokenization. While we keep doing that, there will be a lot of research around various platforms, and we'll come up with some standard for interoperability or for integration. Today, that ambiguity is there, but the way we have seen last 4 5 years, the way layer 2 solutions are coming, or layer 3 solutions are coming on top of a layer 1, I think eventually we will resolve these challenges. I don't see those are really good challenges, but more challenges will be around interoperability between two countries, or interoperability to governance, or one regulator to another regulator. Example, today we talk about account aggregator, which is evolved with the help of RBI, IRD, or SEBI as a regulator in India. Uh, just imagine if you are creating a one token, KYC token, which can be interoperable. I think there you need to see how not only technical interoperability, but how regulatory norms, policies will work cohesively together. That's how we look at it. I think the way we have domain experts, certainly this will happen over a period of time. A dilemma around decentralization, security, or interoperability will be evolved with some kind of a compromise. The way we see most of these platforms will be always taken care by centralized bodies, so decentralization will be taken care. Scalability and interoperability is a technical challenge, wherein we have seen lot of innovations, research is happening on cloud or Kubernetes. That will also evolve. So while there are some challenges around integration interoperability, in my view, it will be evolved. What most important is interoperability between policymakers and the actual governance, actual safeguarding of your customer is going to play a major role.
Awesome. Thank you so much for that detailed answer. Just give me a second. So there's an interesting question which I think I'd like to very briefly hear all of your opinion on that. It is that is tokenization going on in the black market as no regulators are needed there? So I'd just like to briefly know from all three of you what is your opinion on this. So Vikram, would you like to start?
Sure. So when we think about tokenization, as I said, it can be even when you think really, right? CBDC is nothing but a tokenization, and it is NFT in a way, right? It is non-fungible token, effectively. So if you look at tokenization as a word, is not a cursed word. It is something which you can easily apply to anything and everything. When it comes to tokenization of stuff which is illegally created and illegally traded and consumed, that is something which is out of the purview of our discussion, and that is where it might be happening in the black market. But end of the day, when you really think about this, for any ecosystem, you even your reward point system that you normally work with is nothing but a tokenization. Whether you use blockchain or not doesn't matter. It is end of the day tokenized currency that you are using as a reward point. So in my opinion, frankly, it doesn't really matter whether you call it tokenization or you don't call it tokenization. It is where you use it, how you use it, and what is the end use of that tokenization. Based on that, you can create the structure and regulation around it.
Awesome. Saurabh, would you like to give a brief opinion on this?
Sure, and very rightly said by Vikram, that it actually depends on the end use, or what you want to do with that particular token, or the market. And yes, if we are looking at the question, correctly, if I'm looking at it, so is tokenization going on in black market as no regulations are needed there? In few countries, we can say it yes, because if you look at the African countries, they are, they don't have any regulations for this particular thing, but still illegal things happen over there. So partly yes and partly no. That's all.
Thank you so much.
Welcome.
Prasanna, would you like to give a short opinion on this?
Yeah, I think this is how it has been working around, right? So you talk about tokenization or even current market. If you have to make downloads of some mobile banking app, certainly there are other areas people use it, right? But considering the technology behind tokenization, which is blockchain, will give a lot of trust factor around various mechanisms. So I think the way tokenomic works, everybody knows, right, how it works, like ahead of primary distribution, followed by overall post token management, secondary market. So I think there are at every stage we need to see how governance will play a major role, while we are talking about how impact can happen from a dark web and so on. So certainly we can't restrict because we don't have a control there. But the way we will build solutions in our world, which is typically visible, available for our end users, certainly will follow certain norms, certain ecosystems. There are a lot of standards we see in a day-to-day system, like integrations with the secure systems or HSMs, or having audit trails. So I think while that kind of stuff is always available, will always, the way we'll create the overall ecosystem architecture will be always safeguarded. Now it's only around how we are onboarding customers there, how we are doing marketing around those tokens in secondary market or dark web market. It's we can't control that. So but the tokens which we'll see in enterprise world, backed by trust parties or entities, will and backed by blockchain, I think it has a long way to go. Nothing to do with black markets and so on.
And one thing which I would like to add to what we have discussed, along with KYC, there is a
Yeah.
KYT also required, right?
KYT,
KYT is know your transaction. So that also takes care of that in a way, because that end use or what exactly is happening, regulators are aware about that thing, and because of that, know your transaction also is equally important right now.
Awesome. Thank you so much for your time, for participating in the panel discussion. And I look forward to interacting with a lot of you in the future again. Thank you so much, Vikram, Saurabh, and
Thanks.
Prasanna.
Thank you, Saurabh. Thank
Thank
you,
you.
Vikram.
Thanks,
Thank you.
everyone. Bye. Yeah.
And I'd like to thank the audience also. I hope you guys had an interactive, fun session and you got to learn something new. And I'm going to be doing a lot more sessions on tokenization and other topics also. So keep in touch. Take care. Bye-bye.